Hello, so I wanted to talk to you about the UK housing market today and the outlook for it, given coronavirus. Now, back in the early 1990s, I remember watching this comedy, this film with Joe Pesci, in which he played an unscrupulous slum landlord. And there was quite a lot of hype around Joe Pesci at the time, and it was wasn't the greatest film in the world, it was a sort of slapstick. But, in fact, I couldn't even remember what it was called until I was composing this video, and I looked it up just now, and it's called The Super. But there was a line, and that line always stuck to me. And Pesci was lecturing somebody about the three things you should always look for in property. And of course, you were expecting him to say location, location, location. And the gag was that he didn't say that. He said, being the unscrupulous character that he was, bereft of all humanity, he instead said, he didn't say location, location, location. He said death, destitution, and divorce. Now, sadly, the Pesci character was right. The ruthless property buyer will always get a better price if there is death, destitution, or divorce involved on the sell side. And I'm afraid that the terrible tragedy of COVID-19 is that we are going to be seeing rather a lot of all three of those Ds in the months, hopefully not the years ahead. So let's start with death. Now, we don't know what the COVID-19 death toll is going to be, and estimates vary wildly. And Professor Neil Ferguson of Imperial College, he's the government's key advisor, he outlined one scenario in which the figure would reach 500,000 and another scenario in which it would be 20,000. So the likelihood is going to be somewhere between those two. And so far the figure's around 4,000. Although there is a substantial grey area, some people have died of the virus and other people have died with it. The virus might have accelerated things, but was not necessarily the primary cause of death. So to destitution, and I don't know where to start with that. So many have lost their jobs or their businesses. The value of investments, pensions has been decimated. There might be some businesses which have actually benefited, supermarkets, some tech companies that aid remote living and working, Zoom, for example. And things like Getty Images and Shutterstock are having an absolute field day, I gather, now that filming has been halted. Everyone's using stock footage. But these are exceptions. On the whole, the destitution has been terrible. And we may actually get a run on the pound. That's how bad this money printing could lead. And the fallout has just shown how dependent we all are on each other and how much upset can be caused by disruptions in supply chains. Economies need human beings to move about, to congregate, to trade, exchange. And for the time being, that is just not possible. And then there's the third of Joe Pesci's Ds, which is divorce. Now, literally is an overused word. But literally, as I was writing this, a friend texted me to say that her sister, 1 week into lockdown, is asking her husband for a divorce. Now, many couples are going to emerge from this lockdown closer than they ever have been, but many others, unfortunately, are going to divorce as a result. Divorce and separation rates are going to spiral, and prosperous times lie ahead for divorce lawyers. So we have then Pesci's perfect storm: death, destitution and divorce, but at a national level. And that does not bode at all well for the housing market. Now, the market currently, it's already effectively frozen. Viewings aren't allowed. The government has urged that transactions and mortgage offers be put on hold. Removal companies, I understand, have all but shut up shop. Lenders have pretty much scrapped all mortgages where equity is below 40%. And that's probably a sensible move to reduce risk in this way when, future incomes look so uncertain. I mean, it's a sensible move from the bank's point of view. Property website Zoopla said demand last week was down 40% and it predicted that housing transactions would drop by 60% over the next 3 months. And 1 week on, those estimates look very conservative. Now, 2008 was the last time the world faced a crisis of such scale, and many thought that the British housing market would follow the same route as the American market and crash. And it did in parts of the country, but in others, the southeast especially, there followed a boom, but also Bristol, Brighton, places like that, there followed a boom, Oxford, Cambridge, that took people's breath away. Now, several factors drove it. The cheap pound resulted in an influx of foreign buying, especially from Asia. Interest rates were slashed, meaning that money became cheap and mortgages were easy to service. So lending might have tightened for some post-2008, particularly at the lower end of the market, but credit was still a lot cheaper for those who could get hold of it or who already had it. So unlike the crash of 1989 to 93, there were few forced sellers, and that meant that very little extra supply came to the market. Meanwhile, the cost of moving, the taxes, the difficulties of arranging new mortgages meant that many more just chose to stay put rather than move and perhaps improve their current accommodation in the same way. And that put further downward pressure on supply. All that newly created money from all the quantitative easing made its way into the financial sector and on into the property in which it lived. Hence London, Edinburgh, places like that. And that put further upward pressure on prices. And then the government introduced the subsidy for house building companies that was otherwise known as Help to Buy. So all these things drove house prices higher. This time around, circumstances are different. The job losses and closed businesses are far more widespread than they were last time, and now they're in the real economy, not just the financial economy. Recovery looks, at least at the moment, like it's going to be a lot slower. There's going to be far less appetite for risk. It seems that fewer people are going to have the well-paid jobs that justify the loans that will keep house prices high. And even with all the bailouts and the mortgage holidays, there are going to be more forced sellers. Some people are going to need to realise the capital in their homes, and second homes might no longer be affordable. I can't see there being an influx of foreign buyers. People aren't going to want to travel. And there's also the outside risk that all this money printing that's gone on to bail the system out is going to lead to serious inflation. I think it's highly probable, perhaps even a run on the pound. And that could only be defended with higher interest rates, which is going to put a lot of pressure on mortgage holders. Now, successive governments, whether of the left or the right, have shown themselves willing to bail out the housing market at all costs. No government wants a house price crash on their hands. And do not underestimate the lengths that they will go to bail it out this time. Nobody had heard of quantitative easing pre-2008, and no doubt some fancy new word will be invented for the next wheeze invented to bail out the system. But high house prices, as I've said so many times, I've lost count, as much as anything, are a consequence of cheap and easy credit. Houses are financial instruments as much as they are bricks and mortar. But the real economy is also a major factor. And the real economy is in deep, deep trouble. Now, there's an outside chance that the government will use this crisis as an excuse to let house prices fall. And that could give us the lower prices that this country so badly needs if housing is to become affordable again to anyone born after about, 1985. But I'd say that was unlikely. Now, we'll have a clearer idea of where house prices are going once the market unlocks. And I wouldn't be at all surprised to see many of the existing transactions currently on hold fall through due to the sudden change in economic circumstances. But the UK housing market, with some exceptions, has proved the most improbably resilient market over the 50 years of my existence on this good earth. But I'm sorry to say, or I'm pleased to say, depending on your point of view, that its time may finally have come. Thank you very much for watching. Please subscribe to my channel, share these videos on Twitter and YouTube and Facebook and elsewhere. And I'll be back soon with another video. And if you want to buy my fantastic book, Daylight Robbery, here it is. You can buy it on Amazon or you can buy it through my website. It's all about the past and present and future of taxation. And the audiobook version is very good because I'm an excellent narrator and I narrated it. And you can get it on Audible. Anyway, thanks for watching and I'll talk to you again soon.